As an Allianz employee and Allianz shareholder, you want to understand the financial strength of our company. So do our customers and investors. From 2021 on, the way we present our financial statements is changing. This is because of a new accounting standard, IFRS 17. This is the first harmonized accounting model for insurance contracts. Making these changes involves a lot of hard work and investment, but doing so will increase the transparency of our financials and make it easier for customers and investors to compare our performance with our peers. It's important that we all understand what it means. So let's see how it works. The Allianz Group consists of 3 business segments: property, casualty insurance, life health insurance, and asset management. IFRS 17 affects our insurance businesses only. Asset management is not affected at all. IFRS 17 foresees a simplified approach that is similar to our current accounting for short-term contracts. As our property casualty insurance contracts are typically short-term contracts, we are allowed to apply the simplified model. We expect the biggest changes in our life health insurance segment. To understand how IFRS 17 works in the life health insurance segment, let's walk through the new approach step by step. When we enter into new insurance contracts, we will have to make an estimate of all the cash flows that we expect to receive and expect to pay over the coverage period. First, we record all inflows, such as insurance premiums, and deduct all estimated future outflows, such as claims, administration, and acquisition expenses. Next, these cash flows need to be discounted to their present value. Now, IFRS 17 applies a risk adjustment, which represents compensation for the risks taken over from the policyholders. Overall, steps 1 to 4 represent the so-called fulfillment cash flows that are fulfilling our obligations to our customers. The remaining slice is the contractual service margin, or CSM. The CSM reflects the profit we expect to earn over the lifetime of contracts. IFRS 17 doesn't allow us to recognize any of this profit when we issue the contracts, but lets us recognize it slice by slice as we fulfill our promises to our policyholders over time. The slice represents our profit for the period. Making estimates of all the cash inflows and outflows require us to look a long way out into the future, particularly for our long-duration life health business. At each reporting date, we must update all the estimates that we have made. These updates may also have an impact on the profit that we expect to earn from the contracts. Let's look at a simple term life insurance contract as an example to understand how the model works. At the beginning of the contract period, we assumed a life expectation based on past experience and future expectations. After some time, we adapt our assumptions due to changing trends in life expectancy. Let's assume that the expected mortality decreases and we expect fewer payments to the policyholder. In our model, the outflows are getting smaller, and therefore our CSM gets bigger. You could think of it as the pie that we are making has just got bigger. Our profit increases because it reflects a slice of a bigger pie. So what are the key changes in our financials? On the one hand, it is key to know that our profit is based on current measurements, and we'll recognize it as we provide insurance services to our customers. On the other hand, you will be able to find the CSM in the balance sheet, reflecting the future profits we expect to make from our core business, servicing insurance contracts. And why is that important? It will increase the transparency of our financials, making the value we create for our customers and shareholders more apparent. This also will make it easier for our investors to compare our performance with the performance of our competitors. Knowing the principles and advantages of IFRS 17 means being able to understand and communicate the financial strength of Allianz because the way we measure it is becoming more transparent and easier to compare.